Ja, schon ist die Pause wieder vorbei. Zurück sind ungefähr bei der Halbzeit. Ein Thema, was wir in den Panels und Vorträgen jetzt auch schon immer wieder gehört hat und immer wieder gefallen hat, ist das Thema Regulierung. Und ich habe es ganz zu Anfang gesagt, ich glaube, wenn man das Thema Krypto, dezentrale Währung, Blockchain überhaupt verstehen will, muss man auch das Thema Regulierung verstehen. Und in einem Geschäft, was sich tatsächlich sehr schnell weiterentwickelt, ist es halt in einem regulatorischen Umfeld sich zu bewegen, nicht immer leicht zu verstehen. Und deswegen haben wir heute Experten eingeladen, die über die Regulierung von Krypto-Asset-Dienstleistern sprechen wollen und natürlich auch über die Herausforderungen dieser Branche. Wir haben eine ganz tolle Gastmoderatorin eingeladen, die direkt vom Fach kommt und die mit ihren Panelisten heute das Thema etwas näher beleuchten würde. Ich begrüße ganz herzlich auf der Bühne Annika Patz von Avalanche Shutterland, Entschuldigung. Und genau, für alle Native Speaker, die werden sich jetzt freuen, es wird ein Panel tatsächlich in englischer Sprache sein.
Okay. Dankeschön.
Nö. Ich setze mich einfach mal hier.
Take a seat, yeah.
Reseating.
Yeah, so welcome everyone to our panel, where we will take a look at the challenges of being a crypto asset service provider and also maybe take a deeper look into ongoing regulations, also within the AML environment and field, and where we see challenges, indications, implications, but also great chances for the industry. So I have a really stellar panel here. I have Patrick Hansen from Unstoppable Finance, Barbara Halasek from CoinFirm, Oliver Vince from Blocknox and BSDH, also Stuttgart Digital Holding, and last but not least, Simon Seiter, now from Haug Aufhäuser. And yeah, everyone, happy to have you here, and if you could just introduce yourself, starting with Patrick.
Yeah, thanks Annika, and happy to be part of this panel. My name is Patrick, I'm Head of Strategy and Growth at Unstoppable Finance, a super early stage startup founded a couple of months ago in Berlin. We're building a non-custodial multi-chain wallet. We're trying to become the access layer for the mass market to access DeFi, NFTs, and the whole decentralized economy. Prior to that, I worked for 4 years for Bitkom. Bitkom is the German tech association, and I led all our blockchain and crypto topics there, so I was quite involved with crypto regulation and both also crypto regulators in Germany, so really looking forward to this panel.
Hello, I'm Barbara, representing CoinFirm. Head of Regulatory Affairs, looking after the regulatory aspects of crypto assets, particularly AML, where our company specializes in. CoinFirm is a RegTech company providing a number of solutions for anti-money laundering compliance in crypto assets. We use blockchain analytics for that purpose and offer a wide range of tools to address the regulatory requirements. In terms of my background, it's coming from the traditional financial sector. I've spent some time working for investment banks in financial crime compliance area, most notably UBS, also Deutsche Bank, and I've then moved into the software industry, developing AML solutions for KYC, and now looking after that in crypto space. Thank you.
Cool. Hi, my name is Oliver. I joined 6 months ago Börse Stuttgart, so I'm quite the newbie here in the crypto scene on the panel at least. And I mean, at Börse Stuttgart we are operating this amazing ecosystem of crypto ecosystem. So we have, you probably all know, the Bison app that allows everybody in a very easy way to invest into the main cryptocurrencies. We have Börse Stuttgart Digital Exchange, a digital exchange that allows retail and professional investors to invest into crypto, trade crypto, and then we have Blocknox as a custodian. So it's a whole ecosystem around cryptocurrencies. Overall, we have a couple of 100,000 customers in Germany alone. And I think over the last 2 years, an amazing trajectory and a great pickup, so great journey. And yeah, I joined 6 months ago as a co-MD for that digital unit.
Simon, I'm head of digital assets at Hauck & Aufhäuser. I have to be careful. 2 months ago, I would have said at Deutsche Börse. Title didn't change, but the company did. Previously, before Deutsche Börse, I was with Commerzbank and did some first security and also digital euro transactions there back in 2019. We are building up an own new area for digital asset with 20 people end of next year, and have started here with first a manco for crypto funds, as well as we have bought a crypto custodian, actually the second one that received a license in Germany. So very much looking forward to build up here a kind of area for digital assets.
Yeah, great to have you here. So if you took a look back at the last 2 years, maybe 3 years in Germany, I think a lot of regulatory environment has changed, or BaFin, the German regulator, started early on to regulate the trading of cryptocurrencies as Bitcoin, but now we see new licenses and financial services in place, like the crypto custodian, which is also now a financial service in Germany, and also securities or crypto securities registrar for the issuance of crypto securities. But if you take a look at your daily business maybe, and we see this kind of ever-changing regulatory environment, what are your kind of biggest challenges, or what are your latest developments you see in this area? Maybe, yeah, Simon, Oliver, if you want to.
Okay,
yeah.
I can give it a start. I think at first it's really unique and very positive that the German regulator here run forefront. And we have to really acknowledge that, because it's unique also in the way how it is compared to other European countries. I mean, I talked these days to one of somebody working at one of the largest global custodians, and he says, like, if I'm going to build a crypto hub in Europe, it will be in Germany. Yeah? And the reason is the different kinds of regulation that have been put in place already, not even being discussed. I mean, MiCA being discussed, the regulation on DLT market infrastructure being discussed, all fine, but Germany has implemented that already. It's already law. Yeah? And this is really something that's great. I mean, the difficulty is now, funny enough to formulate it like that, to keep the pace with the regulator, yeah, and to build up the new businesses here, because it's not only about applying for a license or for grandfathering, which everybody, of course, wants to do as far as possible, but then you have to set up a whole organization and operation around it. So it's not only that you say, oh, I'm going to buy like us a crypto custodian. No, you have to set up operations that confirm with the bank level how you want to operate financial systems within this new completely space, and it's still quite new, where you still have also open points. Yeah. And I mean, hardest point for me is there, how do you bring together the new world with the old world? Because if we want to make crypto accessible for our clients, we want to do that in a way that they can steer it within their existing portfolio. So for them, it's not that they say we have our regular portfolio and then our crypto portfolio. They want to have it within one place, because they have all the different systems that are following tax, accounting, whatsoever in the existing systems. So you have to somehow reconcile the blockchain with existing systems. There are ways to do that. A way that I think is quite nice to do that is to really connect the banking systems to the chains directly, because the positions ultimately are lying on the chain, nowhere else. So if you want to manage positions of crypto, you have to connect to the chains directly. And putting this into place in a regulatory compliant way that also confirms with the bank's level of quality and internal standards, review, audit, stuff like that. This is really the hard part for me.
Yeah.
Absolutely. Maybe I can add. I mean, definitely, I think over the last 2 years, investing in crypto and especially cryptocurrencies has sort of become a certain mass market phenomenon, right? I mean, it's probably still overall a niche, but I think we are talking not about 100 of nerds investing something. I mean, we're talking about 100,000 of retail customers investing and much more even being interested, right? I mean, nowadays, I think everybody has an opinion on Bitcoin, whether to buy or not, or whether it's a stupid thing to do, but everybody has sort of an opinion. And I think the effect of this is twofold. I mean, one is that the regulator pays much more attention, right? I mean, it becomes meaningful. I mean, if something like Börse Stuttgart or other place in this field, if something would go wrong, I mean, that would be a real problem, right? Not only a problem for us, but it would be a problem for the whole place, the financial system. So I think much more attention by the regulator. That's the first thing. But then, like you said, right? I mean, there's the regulation. I think this is good. This gives certainty here in Germany. We have rules we can look at, we can obey, we can implement. But then there's of course still a lot of room for interpretation. There are a lot of gray zones. There in everyday work when we are developing the product, when we are developing marketing campaigns, when we are developing our customer base. The question is how to interpret these gray zones, and it goes even into areas like, I mean, now we're at the end of the year, we are going into auditing season again, and the question is, as a Block Knox, for example, as a custodian, how do you audit a custodian, right? I mean, of course, there are some rules, but also the auditor, for example, they're still learning, right? They're learning how to do this. Maybe they had one approach last year, and then maybe they're changing it now because they learned, blockchain here and there, what do we need to look into, and this year might be different, right? And this constantly evolving sort of practices where the industry is learning. I think that's a certain that's fun, but that's also a certain challenge.
Maybe they have to use CoinFirm for the audit then, huh?
Yes.
For AML solutions, for sure. And,
Absolutely.
what you've presented is exactly something that we see in terms of our customer base change. We've been present and leader on the AML crypto market for a couple of years in DACH region. Within the last year specifically, we see a really big uptake in the institutional investors, in asset managers. So we definitely see the market being more active, developing on that side. One thing that I would say, though, to slightly put a pinch of salt to what you've presented, I think, not coming from Germany, for me specifically, looking at the German regulations, they are very good for big companies, for institutional investors, for custodians. They are a bit more challenging, though, for small companies. And I'm saying that from the perspective of a provider where our clients or prospective clients sometimes approach us, even though we're not a consultancy company, we're being approached with questions such as, okay, what do you think? Where should I set up my business? Is it Germany? Is it Gibraltar? Is it other jurisdiction? And I must say that for a specifically non-German native speaker, going around different regulations on the BaFin side is maybe a little bit of a challenge, and also the way other regulations are structured is more tailored to small businesses. Yeah, but I think we'll explore those topics later on more as well.
Yeah, but do you see then also, what are the places now then in Europe to go to if you want to build a company from scratch, and what's kind of crypto friendlier or has the developers or?
Well, I must say there's no one-size-fits-all solution and jurisdiction, and I don't think that with this nascent character of the industry, I don't think we're in the position to say this jurisdiction is the best to set up that business, this jurisdiction is better. There are pros and cons on each and every regulatory system. For the small businesses, what I see working quite nicely is Gibraltar, specifically for the reasons of being one of the first jurisdictions to introduce DLT-specific system, regulatory system, which is also rules-based system, not as prescriptive as some jurisdictions might be. They have a set of rules that crypto businesses might have to obey. And those rules go from the AML through registration, the basic elements, but also to elements that some of the countries have not yet thought about, such as market conduct and consumer protection. Obviously, there's also a question, there's always a question in such jurisdictions, what's the thin line between regulation and enforcement of the regulation? But I think that's the question that all the jurisdictions will be facing. It's one thing to have a robust regulatory system in place, it's another thing to make sure that it can be enforced effectively.
Yeah, correct. Yeah, and if you also see like business models developing, offering staking services or lending services, I think this is very unclear at the moment how this should be, also from a contract law perspective, should be handled, and what are your liabilities and responsibilities as a custodian then and as a trading platform. But Patrick, you're building a completely, hopefully unregulated wallet setup. No, what are your kind of challenges then when developing a product, which is, as we already heard, regulation is pretty kind of banking centric and apply it to the new businesses as well?
Yeah, so I wouldn't say we're building an unregulated business, but we're like a non-custodial wallet. So we won't custody the assets of our clients as a professional custodian. But just two challenges I would like to add to what has been said before is like the first one is that the regulatory frameworks and environment is constantly evolving. Even now, I mean, we have the crypto custody license in place. But for example, the German government came up with new AML rules just before this summer. We have new tax rules for crypto. Even the crypto custody license will be kind of obsolete once we have MiCA and the European regulations in place. So I think for a lot of businesses, and especially like early stage businesses like ours, it's still kind of tough to navigate exactly, okay, what kind of potential licenses do we need exactly, where would we need to comply with regulations if we tap into some markets or others. So I would say that's definitely a challenge, the constantly evolving space. Even when I look at some of the newly proposed rules in the European Union, obviously some aspects of them, for example, with regards to AML, look also quite worrisome to me or to like builders of non-custodial wallets. And then a second aspect or a second challenge is obviously growth. I mean, we're a B2C product. We talked a lot about B2B before. Everyone who's in the crypto space has seen how much and how fast the space evolves. One year ago, nobody talked about NFTs or whatever. So the market is super competitive. B2C products need to be like almost global from day one and are like in global competition. So obviously German regulation is not enough for a B2C business like ours. We need to be we need to reach consumers all over the world. So that's why already MiCA is a huge step in the right direction to harmonize rules and to harmonize binding rules all around Europe. But obviously what would be nice is then as a next step is also to have some kind of global crypto rules or framework. And that's basically, I would say, two of our biggest challenges right now.
Yeah. And I think it takes education, right, in order to get familiar with the risks of the products and how they're actually working and the infrastructures we should use. But yeah, as you mentioned, MiCA, the Markets and Crypto Assets Regulation, which is supposed to be a European-wide harmonized framework for crypto assets and crypto asset service providers. Do you think MiCA will kind of provide a real common playground in Europe and invite also businesses from elsewhere and from third countries to join the European Union as a service provider, or are we building here a closed shop European system that is kind of over complex? Or what are your thoughts on this? Maybe, I don't know, Oliver or...
I can start. I think, to be honest, my feeling is this question can't be answered yet. I think it's still completely open where we go. In general, like you also said, I mean, I think we need a harmonized regulatory world. I mean, worldwide, yes, that would be great, but at least in Europe, because right now it's really if we want to expand into other geographies, we really have to country by country basically look, okay, what is the current rule, how might this change over the next month, and what do we need to do to set up a business there. So I think it's highly needed. I also believe that you need certain regulatory boundaries to become a relevant mass market product, to become relevant for B2B customers and so on. I mean, you need to have that framework in place. So from that perspective, I think yes, MiCA, and I think that's what MiCA aims at, right? I mean, that's where it started out, to create the basis for innovation in Europe. Right now, I don't know. I also have to admit I'm not super deep into it, but what I see, what I just observe, I think it's right now overly complicated. A lot of I mean, it starts out at the beginning with the definitions and so on, right? I mean, if I talk to some experts, some people tell me even it's unclear whether cryptocurrencies are included or not. I mean, there's at least room for interpretation whether it's included. And this is for me, you know, this can't be. Cryptocurrency is the key trend right now. So if it's unclear whether this is included or not, then something is wrong. And the other thing that is wrong just from the outside, you know, I'm coming the last 7 years from the MiFID world, so I worked in digital wealth management for 7 years, and you know, if you just open MiCA, you have a document that has 400 plus pages, I think, right now, right? If you open MiFID, for example, and maybe it's an unfair comparison, I don't know, but you open MiFID, and even this doesn't seem to me like a lightweighted, cool, and easy thing, but this has 20 to 50 pages, and we're talking about an incumbent industry, right, with a lot of players and so on. And I think this alone gives me not a super good feeling, because I think it's too complicated right now, right? And it's too complicated. Too many people are trying to just impose traditional regulation on it, and I think we need to go back and focus on the key things and then it can actually help.
I see your point in the complication of the regulation that's being imposed. However, I think the difficulty here is at first the history, how MiCA developed and how it's positioned and what it aims to regulate actually. MiCA is considered to be like a regulatory bucket where everything that's crypto is thrown inside, and then if it's like MiFID II relevant, you pick it out again. This makes MiCA actually, per definition, a non-financial regulation. Obviously, however, the subjects and objects that are being regulated by MiCA are partially financial institutions and instruments that, that's what we are discussing, right, that are close at least to financial instruments, partially very close. Now MiCA has been launched as part of the digital financial package of the European Union. So you have a non-financial regulation within a finance package, basically. Makes it difficult, yeah. I really like the approach of the bucket and the dividing line of MiFID II instruments for picking it out, because for the MiFID II instruments we already have regulation. It would be a nightmare, in my opinion, if we would put new regulation for digital assets that are MiFID II instruments in place. However, of course, this is a difficulty in birth of the MiCA regulation, that you have it within the digital financial package, actually. And I think difficulties that we will see is, for example, that the digital financial package on a larger scale aims, for example, I think it has 4 aims. One is, for example, to foster the capital market union. And now you're creating regulation that could partially, on a technical level, lead to market fragmentization. And that's quite interesting, because they're currently looking at market fragments only from an economical perspective, but not from a technological perspective. Yeah? And so I am a bit afraid here that there will be unintended consequences of market fragmentation due to opening up on a technological level without providing standards. Let's see. And I think, however, you need the complexity, because it regulates almost everything. It's like if you say you believe in something like Web 3.0 or Metaverse or whatsoever, yeah, then that's all inside MiCA. yeah, or in DLT market infrastructure regulation. But that's like if you would say, back in the 19th, let's put up a regulation for the internet. And everything what happens on the internet is being regulated. That's a bit too large fit, possibly, yeah. But this creates, I guess, the complexity.
Yeah, agree.
But is an issue or not? Or yeah,
because
I think it's trying also to regulate in some spaces things that you probably should rather wait until the business is developing and not trying already to regulate something where it's even unclear whether these kind of businesses are.
I'm fully with you. And there's now we're coming into the discussion of this like pivotal discussion, how you approach regulation on a European level for this kind of new stuff and innovative stuff. And then you can say either you wait for the things to develop, then you put up a regulation. This was how it was done in Germany with the crypto custody regulation, basically. Possible, has some other disadvantages, especially regarding grandfathering and stuff like that. And if you look now at it from this perspective, I mean, the nice thing is, I made yesterday like a global comparison for some strategy offsites. If you look on the global scale, I mean, the regulation in Europe is really strong. Yeah, and fostering the technology in other continents, that's not so much the case as much as here. This is good for Europe, I guess. However, you tend to make the mistake to like throw everything into a bucket, and then it may not suit partially. Yeah.
Yeah, maybe just to counter that point, at least partly, to add some controversy. If you look at how crypto is regulated elsewhere, for example, the United States, it's like super complex patchwork of like supervisory institutions and regulations. Basically, Coinbase, for example, they have like 50 different state legislators they have to approach for their money business license, and 50 others for their lending services and stuff like that. They're like supervised by the SEC, the Treasury, the CFTC, like a couple of different institutions at the same time. So I would say, from a like principled perspective, it is nice to have one comprehensive framework, possibly also one single authority that supervises all kinds of like crypto assets, crypto services. But I share the worries of the other panelists that the MiCA is too far-reaching in a sense that it regulates not financial services only, but also the like underlying technological infrastructure of the token, for example, or blockchain technology. And this is when it could become a problem for innovation that is built out of Europe. But but just a step back, I think a comprehensive framework, a harmonized approach, a binding approach in Europe is great. A passporting regime where a crypto custodian, like a German one, can just expand its business all over Europe. And then maybe one last aspect of MiCA that we haven't touched before. Simon already mentioned it. The history of MiCA was basically Libra wants to offer a global stablecoin.
Yes.
We have to counter that with some regulatory regime. So 1/3 of MiCA, 1/3 of the length of MiCA is basically aimed at e-money, so basically single-packed stablecoins and then multi-currency stablecoins. I think there are almost no relevant stablecoins, euro-based stablecoins in the market. And I think, at least personally speaking, I'm afraid of Europe completely ignoring all kinds of innovation in the stablecoin market due to MiCA. So that's definitely one big minus I see for MiCA.
Yeah, I would completely agree with that, specifically with regards to stable coins. I think that's the element where we can lose with regards to comparing us to the US. And there's no simple answer on whether or not MiCA is generally good or not. I think specifically for stable coins, we'll have to be wary of what the US are doing. They're obviously also looking into the area of stable coins, how to regulate that, how to approach it. But the conditions that are put in MiCA specifically for stable coins may be quite challenging for the businesses to comply with. And the obvious question of the danger is, will those businesses move to more favorable places, like perhaps US, depending on what they will do with stable coins. So in principle, definitely agreeing with all the panelists there, it's needed. The legal certainty is something that I truly believe is fostering the businesses. And especially with the recent examples of, for example, Estonia, what happened there with the licenses, businesses being granted licenses, then being withdrawn licenses. I think we're more and more seeing as the industry that the legal certainty and regulations are putting a good foundation for the businesses to know in what environment to operate. We just have to be careful as to how this is formulated and how it is written. And to the points made earlier, complexity of the document, length is the one thing, but also the way it is written. Obviously, there has to be some level of formality given the nature of the document. However, I do come from, well, comparing the MiCA and EU regulations with the UK market I previously worked on and the way regulations are written in the UK. I still see there are some examples of how law can be written in a more accessible way. So that's one thing, and the other thing is to make sure that we start from the good place in terms of defining who MiCA applies to. I think that tallies with your earlier point on the definitions. There is a definition of crypto asset service provider in the MiCA draft, which is still being polished, discussed, and it's still a little bit unclear as to who this regulation will be applicable to. So I think that's kind of the starting point there to have the understanding of whether or not this will foster the businesses or perhaps put some more challenges.
And by the way, I would agree that stablecoins shouldn't be regulated under MiCA. For me, this is clearly MiFID business.
Sorry, I didn't hear. This is clearly what? Sorry.
For me, it's clearly MiFID business. Yeah, because it's e-money. Yeah, you basically issue private money. That's regular payment services. Yeah, that's what PayPal does, just on another tech base.
Yeah, so we might have e-money, but then also other products.
Yeah.
Agree. But then we see MiCA, that's a bummer that UK has left, because now our formalities in the laws are quite difficult. We talked about we need global standards. Now we have a kind of global standard with regard to AML regulation, anti-money laundering regulation, coming to the so-called travel rule. But maybe before we start with this travel rule and AML compliance, maybe Barbara, you could provide us some insights on how AML and also counterterrorism financing, how this is monitored in the crypto space and what kind of products we already have to monitor and to be compliant.
Okay. So first of all, I think it's important to stress that crypto businesses in regulated jurisdictions are obliged to follow basically the same anti-money laundering compliance rules as regulated financial institutions. And that relates to know your client, ongoing monitoring of transactions, suspicious activity reporting, etc. That in principle is justified, and I don't think it will change. However, what we're seeing on the AML compliance scene is the continuous drag and drop approach, where the regulators are stressing that the AML regulation must be technology neutral and same principles should apply to all the businesses. Whereas what we see increasingly is that crypto space brings specific risks, but also specific solutions that are not available in traditional finance. And what I think we're still lacking is the appreciation of the solutions, of the transparency that the blockchain analytics, that the blockchain brings for monitoring the transactions and utilizing that somehow in the regulation. Obviously, there could be utopian visions of making regulation embedded in the crypto space, embedded even in the contracts. That's probably going a little bit too far, but on the other hand, we have regulators trying to apply the same principle without giving the right consideration to the implication it has on the businesses. Specifically, as you've mentioned, travel rule seems to be the most challenging, I suppose, from the AML perspective at the moment to implement.
Yeah. Patrick, can you explain what the travel rule is? Because I recall from our Bitcoin meetings previously that you worked heavily on the travel rule and the German implementation of it.
Yeah, so the basics, the travel rule is a recommendation from the FATF, which is an international organization that recommends anti-laundering policies and regulations to all, like basically all states all around the world. And those recommendations are binding in the sense that they have to be transposed into national law and regulations, otherwise you are like red flagged as a money laundering hub. And what the travel rule says is that basically for every kind of blockchain transaction, if I send you some Bitcoin or Ether, if we do that through two like service providers, for example, two exchanges, and I send you a couple of Bitcoins from my Coinbase account to yours or to your Binance account, those two service providers that are in the background, Coinbase and Binance, they have to exchange all the personal information of their respective customers. So Coinbase has to send my name, my address to Binance so that they can make sure they have always the full transparency and traceability of that kind of transactions, similar to what we currently have in the banking or the regulated payment space. Maybe just a quick sentences of what I think of it. I think it totally ignores the main innovation of blockchain and crypto, which is peer-to-peer. It's something we couldn't do before in the traditional financial sector. We always need a bank, an IBAN account from a certain bank in order to transact together. In the blockchain space, I can just set up a software wallet, a hardware wallet, and transact with you without a service provider in the background. And I think that's the main ideological critique I have towards the travel rule. And then on top of that, there are like a couple of other more like technical and other reasons why I think it's not a very thought through recommendation, but I'm sure we will get maybe deeper into that or maybe not.
Yeah, maybe Barbara, I know that you talk to the FATF and are in exchange with a lot of FIUs. So what do you think will this travel rule kind of make better, or do we have better options already?
Yeah. First of all, I don't think it will change. I don't think that the regulators have the appetite or even consider withdrawing it. So it is there, it will be there. There's no question of that. I think the biggest question there to consider is how to approach FATF travel rule with regards to unhosted wallets, with regards to non-custodial wallets. So it's clear that sending the transfers from one, say, cryptocurrency exchange to another cryptocurrency exchange, that transfer of data is required. There are still many challenges in addressing that in terms of privacy, in terms of security information, but as we live in a developing market world, developing technology, there are already technological solutions to address that. What is still a big of a question mark is how to handle situations when a cryptocurrency exchange client sends assets into non-custodial wallet where there is no cryptocurrency exchange on the other side. And so far the solutions proposed, the solutions that the regulators are going for, are addressing the problem only partially. They do require cryptocurrency exchanges to verify who's on the other side of the non-custodial wallet. But if you think about it, that just handles this very transfer. There's still a whole bunch of possibilities of moving the assets between unhosted wallets. And I think what I'm lacking still in the discussions with the regulators is the courage, I would say, the courage to take a step back and to think, okay, how do we do it in blockchain? What technology we can utilize? Could we revolutionize it and approach it differently? I think it's a matter of courage. It's a matter of a little bit political forces as well in terms of influencing the regulations. But I will also say it's a matter of a dialogue. I think to address that, we cannot say, oh, it's the regulators that have to solve it. I think as an industry, we also need to work collaboratively to propose alternatives, to say, this is not working, but we have an alternative.
Yeah, totally agree. So, Simon, you're nodding.
I'm nodding, yeah. I think one main risk is basically, especially if you're coming from non-custodial wallets, that of course then transfer of assets will move, it's not a fear, but simply development maybe, into more decentralized approaches. So of course then non-custodial wallets will be traded via decentralized exchanges, and this basically then moves the assets away from the regulated to the not yet regulated space. So I think this is basically like, it's an inherent risk of the regulation. If you put up a regulation where the regulation will push the assets into the non-regulated space, then the regulation doesn't catch them. So this is then a structural difficulty, and for that reason I'm totally with you to say, like, how can we rethink the needs and responsibilities? Yeah, I'm totally also with you regarding same business, same rules and stuff like that. All fine, but we have to rethink how to address them, because to be honest, if they yet lack an approach to, in a more intelligent way, apply this role to the centralized exchanges, to be honest, how the fuck do they want to apply it to a decentralized exchange?
Yeah, I would totally second what Simon just said, and just some also real-world evidence on that. In Switzerland, for example, the travel rule is already fully implemented, and the funny consequence is, since central service providers, they don't have yet a data messaging standard in infrastructure where they can exchange their personal data.
Like a SWIFT system.
Exactly, like SWIFT for the traditional banking sector. What happens is, if I want to transact with my Bitcoin Swiss account and want to send some crypto to my Binance account, since there's no way for Bitcoin Swiss to send the personal data to Binance, what happens is they just block that transaction. And what customers can do is they can then take just a non-custodial wallet, a self-hosted wallet, transact their Bitcoin, for example, to the self-hosted wallet, sign that transaction. I mean, there are some methods to basically verify that you are the real holder of that non-custodial wallet. And then basically they have their asset in the non-custodial space and can do with it whatever they want. Send it to Binance, basically the non-custodial wallet as a bridge to Binance. And the consequence is, the absurd consequence is that a regulation that is supposed to bring more transparency and traceability into the system pushes people towards the non-custodial space. And it's happening in Switzerland.
Yeah, I see that. But yeah, I think we could talk for ages, I guess, and I'm very interested maybe in 1 or 2 years what we will talk about then and how this will all have developed. And I think this is what makes the space so interesting, to have kind of a moving target, but also to be part of developing something and find new solutions. So yeah, thanks that you all agreed to participate. And yeah, if there are any questions, I think we will mingle in, in the hall. So,
First of all, thank you for being here. Yeah, as you mentioned, are there any questions from the audience? Oh yes, we have some questions.
Hi, thank you a lot. Hannes, my name. I wanted to ask you, you talked about FITF standards, about the travel rule, about the implementation which is planned in the European framework and as well in Switzerland. And I wanted to ask about your opinion of the German approach of the compliance with travel rule, which was recently put in place on the 1st October this year.
Should I?
Yeah, go for it.
Yeah, it's quite similar to the Swiss approach. So the German regulation, the crypto transfer regulation, that is applicable since the 1st of October, so it's quite fresh. The difference is that German crypto service provider, they have basically a transition period. They can apply for an exemption of that law, and that's what basically every single crypto provider in Germany is going to do. They will just apply for that exemption, and for 2 more years they can basically not follow those travel rule requirements. but the basics of the crypto regulation are quite similar to what has been done in Switzerland.
And, but the reason is also to say, right? I mean, I think you have to also give a reason. But if you're not following the standards, you cannot just opt out. But I think the reason, and this is why I found it a little bit funny that this rule was enacted on a such short notice. All of a sudden, 1st of October, it's there. Is again because there's no real standard right now, right? I mean, the industry, first of all, I mean, it only works. It's a big network effect, right? It only works if you have clear standards, if you have providers you can connect to, and so on. I think the industry needs a little bit of time to find the standards, and we need. It also only works for me if I have 1 or 2 providers there. I mean, if I need to connect to 10 to make that happen, or to individually to all the it doesn't work, right? So. Yeah, I think that's a challenge right now. Yeah, that's why I think the industry typically now reacts in, okay, nice to know, but sorry, we need 2 more years, right?
Yeah, but yeah, the regulator grants 2 more years, so at least I think main reason why it was implemented on the short notice was a German FATF review, so in order not to get blacklisted as a Germany. But yeah, we will see. We will need some standards and maybe find some other approaches as well. Yeah.
So thank you. Any other questions? Okay, that's great because it's freaking hot on stage, right? So next time we recommend beachwear as a dress. How do you say dress code? So yeah, I have to thank you again. So thank you for being here to joining us, and we make a short break, and after the short break we are back on stage. So. Thank you for being here. Thank you.
Thank you.
Bye-bye.